Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, annuities, disability, business continuation, or final expense life insurance funding, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. Now, in this podcast, we're going to talk about the difference between term life insurance versus whole life insurance, specifically for burial, cremation, final expense, life insurance, or funeral funds. So, there's a lot of confusion out there about what would be the most appropriate. Should I get term life insurance or should I get whole life insurance? They are both specialty products. They both are unique, and sometimes they will cross over, but oftentimes there's differences that are distinct enough that you definitely should avoid one or the other. So let's do this. Let's start by talking about term life insurance. So, term life insurance means it's going to last for a specific period of time, a term. So if you bought a car and it had a 6-year term payment plan, it'd be 72 months worth of payments. And after you paid those 72 months, the car would be paid off. It would be yours. Now, say in an insurance policy, term life insurance, say you've got a 10-year policy that's going to last 120 months. What's going to happen at 120 months is typically the plan will just cancel and you would have paid all that money and you would have lost that money. Now, when I say lost, I say that's relative because you're paying that money and the insurance company the whole time was assuming the risk that as you're paying a very small monthly premium, that if you died in the next 10 years, they would have to pay a very large, often 6 figures or more, insurance policy payment, a death benefit payment. So just be aware that it's got a limited coverage period of time. Now, some policies are convertible, depends on the insurance company. You could perhaps carry that over. Some policies out there as well, after that 10 years, you could potentially carry that policy on, but now your premiums would get adjusted up to your current age because you now be 10 years older. And many insurance companies out there, they don't want you to renew. So they may jack up the pricing, maybe 3, 4, 5, 6, 7 times. Depends on the insurance company. But a lot of times it's just very clear that it's not worth renewing that policy. In most cases, you'd be better off getting another policy. Another thing you can do is if you needed more insurance coverage, get that insurance coverage before the existing policy ends. And that way you can get qualified. And then that way there's no gap in coverage. Now, one of the challenges you're going to find for term life insurance is that most of the companies don't go low enough price wise, coverage wise, to take care of final expense needs. So most of the insurance companies, they're going to start for term life insurance like around 50,000, some at 100,000 and some even more. Now, the thing is term life insurance, you could get millions of dollars if you wanted, but that's not the that's not what this podcast is about. We're talking about final expenses, which would be burial, cremation, final expenses, things like that. So typically we're talking anywhere between policies between $5,000 to $25,000. So you're going to have a tough time finding a lot of insurance companies out there that would give you a 10-year or a 15 or a 20 or a 30-year policy for that small amount of coverage. It's just not worth their while because the premium is very, very small for most people. Now, what you will find out there is some insurance companies that have what's called 5-year age banded term life insurance. What that means, a lot of times those are the plans out there that, hey, you can pay $1 for the first month. Be wary of those plans. I'm telling you, be wary of those plans. Do some research. But yeah, what ends up happening is every 5 years, your premiums are going to go up. And then what typically happens is the pricing just gets so high as you get older that you've got to cancel the policy. And then the insurance company just keeps all your premiums and it's been nothing but profit. And then you suddenly figure out, why the premiums were so low. What also happens with those term life insurance policies, or certainly most term life insurance policies, they're going to cancel once you get beyond age 80. So even if you can absorb the price increases, if they cancel the policy because of a specific age requirement, again, you paid all those premiums in and you won't get any benefit. I mean, there's kind of a one thing that's not a downside. I mean, you didn't want to die in the first place. I can assure you of one thing. If you got a term life insurance policy, you're going to be happy when you outlive it. You're going to miss the insurance, but the idea with term life insurance is to outlive it. You've won the game if you can do that. So the just you got to be very careful. There's just a bunch of, I wouldn't say sneaky companies, but sneaky marketing, and not everything's entirely clear out there. And people kind of fiddle with words and copywriting to make you think that it's like something more than it is. And if it seems too good to be true, like $1 the first month or something like that, then be very wary. You can always reach out to us at funeralfunds.com, 888-862-9456. We can help you out with any of that. But typically, let's go over a few things about term life insurance. Number one, it's typically dollar for dollar. If we're talking coverage amounts that both term life and whole life cover, term life is always going to be cheaper. And the reason is this: whole life insurance lasts your whole life. It's going to pay out no matter how old you are. Most of the plans go all the way up to age 121 years old. So you're not going to outlive the plan. Term life insurance, they just know that most people are going to outlive that plan, and they're just going to pay the money. And again, that's not a bad thing. The life insurance, term life insurance is meant for catastrophic things happening, things that happen out of the blue. And if you've got a lot of, financial liability, like maybe you want to get the home paid off, or make sure there's money to get the kids through college, or, pay off a bunch of debt, or maybe you've got a business. If you got a business that, you've got a key person insurance that if they passed away, it would severely impact the business. Works great for that. We can help you out with any of that. But yeah, dollar for dollar, it's going to be lower, less expensive. The other thing, term life insurance is going to have flexible coverage. If you need it for 5 years, 10 years, 15, 20, 30 years, there's even annual terms. I mean, 1 year annually renewable. So each year the price would go up. So there's a lot of flexibility. If you've got a 30-year mortgage payment, a 30-year policy might make sense. But you know what? Maybe you're going to pay a couple extra $100 on that mortgage every month, and you're going to pay it off in 20 years. Cool. Get a 20-year policy. You'll save money. Maybe if your mortgage, you've got you two as a couple, and if one of you passed away, you only need half the mortgage paid off. And then the surviving spouse could afford to stay in the house if it only had half the mortgage. So mortgage protection insurance, it makes a lot of sense. We can help you out with that. We can help you understand your options. It's a great way to go. Though the only thing worse than somebody passing away, if you're a couple, is somebody passing away and the other partner having to lose everything, including the house, and now be homeless. That's like two tragedies stacked on top of each other. And if you're a homeowner with somebody that you love and care about, you should never let that happen. The other thing, term life insurance, our third point is you get higher coverage amounts. Depending how much you need, you could get millions if you needed it. Now, most people don't need millions, but most people probably need $1 million. If you make any income at all, a decent salary, $1 million is not a lot of money these days, right? And, you've got to consider too that if the spouse or partner or whoever gets that $1 million, and say you make $100,000 a year, they're just going to draw out of that. It's only going to last 10 years. What if your kids are 2 or 3 years old? Now they're going to be 13 years old-ish, right? And there's going to be a lot of money that they're going to need to get through college and stuff. So keep in mind, if you have $1 million worth of insurance and the surviving spouse invests that and gets 4% interest, that's only going to pay $40,000 a year. Well, you're making $100,000. So that'd be difficult for that surviving partner to take a $60,000 pay cut from your salary. So just be aware of some of those things. We can help you work through all of those different things. The fourth tip or area we're going to cover on term life insurance is convertibility. So if you get the right policy, say you get a 30-year term life insurance policy, some of the insurance companies out there, as long as it's the right policy, will at some point allow you to convert a portion of that to whole life insurance, and you won't have to qualify medically, which means if you kind of got sick at some point during the term of that policy, that's a very desirable option. Now, not all insurance companies are going to offer that. So you just want to make sure that you're talking with an agent that knows their stuff. We can certainly help you out with that. And what's becoming more and more common out there, and our fifth and final point with term life insurance, is simplified underwriting. It used to be in the good old days where you had to get a blood test and a urine test and have a nurse come out and take your blood pressure and do all this other stuff. So that still happens with some policies. But now we've got what's called simplified underwriting. You're just going to have to answer some health questions, and they will check your medical records, for prescriptions. That's typically the only thing they're looking for. So, if you were on a chemotherapy drug, they would know that you have cancer and they wouldn't approve you for that. But if you're on high blood pressure medications, they don't care about that. High blood pressure is controllable. They actually want you on high blood pressure medications if you got high blood pressure. It means you'll live longer. Same thing with cholesterol and some other things. So just be aware, those policies, in many cases, you can get approved day of, or certainly within 3 to 5 days with most insurance companies. And their pricing is generally very competitive as long as you go with the right company. So we can certainly help you out with that. Most of the mortgage protection insurance is simplified issue. Super easy. You got two people in the home, kids, everything. Everybody's got a busy life, taking time off work to schedule paramed exams and blood tests and urine stuff is really difficult. So the simplified issue really works terrific for mortgage protection. So let us know if you need help with that. Let's move on to the whole life insurance because it's different. And the number one way it's different is it's permanent coverage. It's going to last your whole life as long as you're qualified, of course, right? So most of the policies out there are going to last until age 121 years old. And that pricing that you locked in at your earliest, youngest age is going to stay fixed and constant through the entire plan life. It's going to be locked in. And your coverage amount is going to be locked in. It's never going to decrease. So that's what you want. Most people who want final expense insurance, burial, cremation, funeral funds, they want things locked in. They want that predictability because they are on a fixed or limited income, typically on Social Security or disability. So that predictability is really important. The second point on whole life insurance is the cash value accumulation. Now, I always tell people, you know, you're not going to get so much cash value in the policy that, you can take a boat trip, a cruise to Tahiti or something like that. And I really don't believe that's the best use of it anyway. But, if you've had your policy long enough, it does build up cash value. And if there were some sort of household emergency, maybe the refrigerator went out, you need to buy a new refrigerator. If you had enough cash value in the policy, you could borrow against it. But I want to tell you, we typically recommend against that. And the reason is most of the time why people would borrow for that refrigerator is because they don't have the money. And if you borrow from the policy to do the refrigerator and you don't have the money, how are you going to pay off the loan against the policy? And then we see policies lapse. So we typically recommend people don't do that. What we actually recommend they do is use that money. If the policy is set up correctly and you miss a payment, your policy can actually borrow against the cash value to make the monthly payment. And that allows you to catch the error, even if it's 2 or 3 months or 4, catch the error, get your banking info corrected. And then we always advise you to pay that back so you get the full death benefit when you pass away and you don't have to pay any loan value on that at all. So just keep in mind, it's a nice little financial safety net. We always make sure that that's included with all the plans that we help at Funeral Funds of America. The third item for whole life insurance is predictable premiums. We kind of talked about that a little bit under permanent coverage, but that's what people on Social Security or disability want. They just want to know what the payment's going to be so they can just fit it in their budget every month, and they're never going to have to worry about this again. A lot of times, what we're helping people do is just tie that premium draft date to their Social Security pay date. And when that money drops into their account, we can just have the insurance company just draft it out, and it's seamless, and the payment always gets made. And then once you're done with that, you can just look at all the money in your checking or savings account, and you know that that's just what you have left for the rest of the month. So you never have to worry about that. The fourth item for whole life insurance is guaranteed death benefit. So what that means is the coverage amount that you have that you are insured for, that's always what's going to be paid out. Now, I will say there's one caveat to that, and that's 2-year waiting period policies don't do that. And we don't recommend those. And we don't help people with those, by the way, at Funeral Funds of America. But yeah, if you get a 2-year waiting period plan, it's not going to pay out a penny if you die in the first 2 years of any health or medical reason, regardless of how healthy you are. So, boy, I tell you one thing, stay away from 2-year waiting period policies. Don't believe those. We've got podcasts on that. We've got plenty of articles or videos on YouTube about that. We've got articles on our website. Just take advantage, get smart about some of those. You should never get a 2-year policy, a waiting period policy, when you qualify for first day coverage. So you want a guaranteed death benefit. That means that if you sign up for the policy today and you're approved and you make your first payment, your policy goes into force today, and you die tomorrow, you want a policy that insurance company is going to pay that out. They're going to get that check sent out. And that's what we can help you out with at Funeral Funds of America. And then the fifth one is tax advantages. And this one's kind of weak. I'll say it's kind of weak, but it's very clear. It's a legitimate concern as well, because we do get people asking questions. Well, if I get this, or if my children, or if I'm the beneficiary and I get this money, is it going to be taxed? And the answer is no. And the reason is as long as you're paying the premiums with after-tax money, which meaning the government's already taxed you on that, and that's your spending money, then you'll get paid the full death benefit, and you will never have to pay taxes on it because it's been paid for with pre-tax dollars. So if you had a $15,000 or $20,000 plan and you were going to be buried somewhere, yeah, when the insurance company writes that check, it's going to be $15,000 or $20,000, whatever the coverage amount is. So that's really nice that you don't have to worry about that. And you don't have to worry about, our government messing with the taxes. And, it seems like, the way the spending, our government spending's out of control. We know taxes are going to get higher in the future. It's nice to know that, this is very predictable and it's going to get the whole death benefit paid out. So that's really kind of the 5 kind of top points between term life insurance and whole life insurance. Now, again, for burial, cremation, final expense, or funeral funds, you definitely want a whole life insurance policy. Kind of for any other life insurance needs, either personal or business, or, like protecting a mortgage, or you just have a lot of outstanding debt, things like that. Term life insurance can be a terrific option, but there's definitely some nuances that you want to make sure that you have an agent that is very experienced in that, so they can explain that to you so that you know all your options, so that you get exactly what you're looking for and exactly what you pay for. But you know what? We look forward to helping you out with this insurance at some point. We will be blessed to help you with this. Until that day comes, you stay safe, you take care, you have a nice day, and you can always visit us at funeralfunds.com. Our phone number is 888-862-9456. You take care. Bye-bye.